Hey guys, it's Angelo, Christian Financial. Thank you so much for watching my podcast, Real Estate Insider. We try to educate, empower the world. Remember, Angelo, Christian Financial, we are a direct lender nationwide for commercial and residential. It's where the world goes for funding. And today we're talking about a great topic. A lot of people always ask me, how much income do I actually need, Angelo, to be able to buy a $300,000 home? How much income do you need? So today we're going to break down that myth and give you the facts and dispel it, so that way you're educated and you're aware of actually how much income you need to be able to buy a home up to $300,000. And this is what lenders look at, right? You have different components when you're buying a house or buying real estate. You have your debt ratio, your credit score, your housing ratio, and another thing called payment shock. And we're going to explain this today and educate you so you know how much income do you actually need to be able to buy a $300,000 home. And we're going to do a very basic understanding of this and give you a broad definitions because there's different types of products, there's different types of income. So this is just to get a general understanding about how much income that you need to qualify to buy a $300,000 house, okay? So you have your debt ratio. In this example, we're saying that your person has about a $400 car payment, they have student loans about $200, and then they have credit cards of $200. So that total is $800 per month. Okay, and a $300,000 home, let's just say that the payment, okay, is going to be about $2,000 per month with everything included. Okay, so you have your debt ratio is your back-end debt ratio with your debts and your new mortgage payment divided by your income, and that typically it shouldn't exceed over 50%. There's some programs that are even more conservative, 40%, 45%, but let's just say 50% is the maximum. Your credit score. Your credit score ideally needs to be 640 plus. I'm gonna put plus, plus, plus. The higher the better. The higher the credit score, the lower interest rate you're gonna get, the more favorable underwriting. So I'm saying minimum 640. That's your middle credit score out of all three credit bureaus, guys. That's your middle credit score. Out of all three credit bureaus has to be 640. Housing ratio is just your house payment relative to your income. So housing ratio, they typically, at an extreme has to be, let's just say 35 to 45% of your earnings. So, sorry about that, guys. So 35 to 45% of your income. So what does that mean? That your house payment, and this is an extreme, should not be more than 35 to absolute worst case scenario 45% of your income. That's at the polar extreme. And then you have payment shock. Payment shock is something that underwriters look at too. If you're buying a $200,000 home, do you have a history of making that type of payment? If you're living rent-free with mom and dad, and then you want a $200,000 house, now an underwriter may not feel comfortable with that, because you never paid $2,000 a month before. How can you go from 0 to $2,000 a month? They may want reserves on you, which is PITI reserves, 6 months, 3 to 6 months, because you never paid $2,000 a month before, okay? So they look at payment shock too. Do you have a history of making these type of payments? So in this example, the question is that what's the income that you need to make to be able to qualify? If we have right here $800 a month in bills and your new house payment is $2,000 per month, then your total equals $2,800. Okay? Your total equals $2,800. Now, and we're saying that 50% is the maximum debt ratio that you can have. That's the absolute extreme. So let's think about this. If you're $2,800 for your debts, that means your income has to be double that, right? Minimum. So you have to be making at least $5,600 plus per month of income. So plus. So, that comes out to $65,000 a year plus of income to be able to qualify to buy a $300,000 home. And this is the answer to the question is how much income do you need to be able to qualify to be able to buy a $300,000 house? And this answers the question here. You need to be making at least, in this example, now you can obviously, in this template, plug in your debts here. Maybe you have different debts. I don't know, maybe you have more debts or less debts. But basically, at the end of the day, you need to be making 2 times the amount with all your debts included, not including your food or utilities or rent, but your things reported on your credit report. You need to be making 2 times the amount, okay? Versus with in this example. Now, we're gonna look at another video at a $500,000 home, but this is for a $300,000 home. So remember, we are a nationwide lender. Our minimum loan for residential is $200,000, and we go down to a 640 credit score. If we can help you with any type of mortgage funding solution, call our office at 832-431-633. And also, if you want to get pre-approved right away, just click on that link below to get signed up to actually get pre-approved. We'd love to help in any capacity, in any fashion that we can with Angelo Christian Financial. And also, we just shot another video. I'd like you to check that one out too.